This is BTV Business Television.
Welcome to BTV Business Television. I'm Jessica Kajaszak.
And I'm Taylor Tone. Looking to discover the next investment breakthrough? This is the place to be.
Exactly, Taylor, because this week on BTV, we focus on resource companies with bright futures that have recently undergone transformative mergers and are now positioned on their next phase of growth.
So I want to have shareholders that don't trade the stock, but they buy it and hold it for their grandchildren.
To complete a billion-dollar merger, it's kind of a dream come true.
Plus, we highlight gold and copper companies across the Americas that are executing on opportunities investors should be watching closely.
We've got 3 mines, 2 in Australia, one of which also does antimony and has for many years, and another in Sweden.
We're fully permitted for construction of a 220,000 ounce a year mine.
There's only about 4 or 5 copper projects in the U.S. right now that are planned to come online in the next 4 or 5 years, and ours is the 3rd largest.
We have 2 producing mines, Nicaragua and Colombia.
So join us as we explore the opportunities shaping the future of the resource sector and beyond.
Alkane Resources, a gold producer and explorer from down under, transformed the company last year through a merger with Mandalay Resources, creating a bigger gold and antimony player with global ambitions.
I love when a plan works. So the merger with Mandalay works. Both companies were quite small, subscale, less than 100,000 ounce production. So the rationale for our merger was increase relevance, right? Increase access to capital markets, make ourselves accessible to passive funds, go into the different indexes that track it. So there's like a corporate reason for doing it. That's been really successful.
The new and improved Alkane Resources boasts a formidable portfolio of operations.
We've got 3 mines, 2 in Australia, one of which also does antimony and has for many years, and another in Sweden. We have one we call Tomingley. It's been running since 2014. It's in New South Wales, about 4.5 hours west of Sydney. Underground mine, does about 80,000 ounces a year, another 7 years ahead of it. Produces gold doré, which gets refined in Sydney.
We have Björkdal in Sweden, which produced over 42,000 ounces of gold in 2024.
And we have the Costerfield mine.
It's about an hour and a half's drive north of Melbourne in that classic gold rush area of Bendigo. It's been running since 2008, although it's a historic mining area. Produces gold and an antimony and gold concentrate, very topical metal. We've done between 2,500 tonnes a year, and this year we'll do a bit 1,000 tonnes a year of contained antimony, yeah.
One of the net benefits of the merger with Mandalay is Alkane's robust financial outlook.
Our balance sheet's in great shape, as you'd hope for a gold production company in a gold market. Now, liquidities have gone up 5 times in both the ASX and TSX. We're doing typically 40 to 45,000 ounces a quarter. So we have just under 250 million Australian dollars cash and bullion in the bank, so 155 US. How are we going to deploy that? At the moment, we're looking for other growth options. So we have organic growth. We're spending a lot on exploration and extending our reserve life. But as well as that, we look for, is there another producer that we could merge with for a similar uplift? Or is there a development project that's ready to go? There's always that part of us who are involved in exploration thinking that one day something's just going to go bang.
Alkane has successfully launched an ADR, American Depository Receipts, program to further increase its exposure to new North American investors.
Mineros has been a leading Latin American gold producer for decades and a fixture on the Colombian stock market for more than 45 years. With a new CEO and leadership team in place and a new global vision, Mineros may finally be on U.S. investors' radar.
Mineros has a very rich history. The company has been around for 5 decades. We have 2 producing mines, Nicaragua and Colombia. Nicaragua produces about 140,000 gold equivalent ounces. Colombia produces about 90,000 ounces. But to some extent, it's also a brand new opportunity, especially for North American investors. We have a track record of 50 years of steady production, return to our shareholders, in form of dividends, buybacks. But for the first time ever, we're investing in our assets as well. So this is a new vision. We see a lot of growth opportunities in what we're doing in Nicaragua. We are debottlenecking the operation. There's way more mineral than we can process at the moment. So this year we're investing in increasing processing capacity by 40%. We're going from about 1,500 tons per day to 2,500 tons per day. We're improving recoveries as well, and we're improving grades. Then we have the Porvenir development asset, which is just southwest of our two producing mines in Nicaragua. This was an asset that was looking very attractive at $1,650 gold price when the latest PFS was published. At $4,000 or $5,000 gold, it's looking very, very attractive.
Mineros has expanded its growth strategy with the acquisition of a new development project.
I like to describe Mineros as a very nice package deal. We are a steady producer. We've been producing for 5 decades. We're also a developer. Chile is our latest addition to the portfolio. It's an advanced exploration opportunity. We are in the northern part of Chile, in the Atacama region, surrounded by producing mines, by advanced development opportunities. The most exciting part of my work is transforming this 50-year-old company into the modern mining company, one that is actually looking outside Latin America, wanting to play in the global space. It's just a very nice combination of history, very rich history, and an amazing pipeline of opportunities.
And Mineros continues to expand with the announcement of another new acquisition, a gold exploration project in Colombia.
Carolina Rush is an exploration company listed on the Toronto Venture Exchange. We're exploring the former Brewer Gold Mine in South Carolina. South Carolina is the home of the first gold rush in all of North America. We believe with both gold and copper, it's a very compelling project. I think there's 3 things that make us stand out. 1, we have defined ounces in the ground. With only 36 holes, we've proven 500,000 ounces of gold in a maiden resource. 2, we have funding right now with our partner for drilling deep holes, which for a small company with a big target, it's great to have a big partner. And 3, we have discovery leverage. So depending on our exploration success, the scale of this could grow pretty significantly. We're also very excited to be working with Oceana Gold Corporation. They have the Hale Gold Mine, which has 5 million ounces of gold, and it's only 15 minutes away. So we're in a great neighborhood.
Up next, a gold development company about to take on their most ambitious project yet.
If we can add another 1,000 meters to 1,500 meters of depth to this project, it becomes one of the bigger targets in the gold space worldwide.
We'll be right back. You're watching BTV.
The slogan, "Drill, baby, drill," has been synonymous with the oil and gas industry, but more recently it's become a rallying cry for the North American gold company Osisko Development. It's a mission statement that's led the company to some huge successes. Now they're at it again with their latest gold project.
My favorite way to start the day is coffee and drill results. I have a sign in front of my door that says "Suds," and "Shut up and drill, stupid." That is my passion, my hobby, and my raison d'etre. Historically, the Osisko Group, we've been one of the largest drillers in Canada in the drill space. We've collectively drilled more than 6 million meters in various projects across Canada, and this is our most recent push and one of our larger projects that we've got involved with over the 20 years that I've been running Osisko.
The Caribou Gold Project is Osisko's flagship asset, and for good reason.
Right now, we're focused on the delineation drilling of the fairly large land package that we have there with 83 kilometers of land. We're fully permitted for construction of a 220,000 ounce a year mine that started construction earlier in the summer, and we'll go to final investment decisions this year. So we have 9 drills on site right now and an entire underground mining team. We're about 2 kilometers of development in the underground. And we're hoping to commission this mine in 2028, 2029.
While exploration work to date underpins the planned development, Osisko continues to focus on the project's growth potential.
We've only drilled down to a depth of 350 meters, and we've documented one of the larger resources in the space, over 2 million ounces of reserves and 3.5 million ounces of measured, indicated, and inferred. And then we're drilling below that 350 meter level down to a depth of 2 kilometers. So if we can add another 1,000 meters to 1,500 meters of depth to this project, it becomes one of the bigger targets in the gold space worldwide.
That prospect has the company believing that the best is yet to come.
This company has a market cap of about 1.5 to 2 billion right now, and we've raised about 1.2 billion dollars in the last 10 months. So we're fully financed, fully permitted, drilling with new discoveries. When we reach final investment decision, we should be in a place to build Canada's next big gold mine.
Osisko's project pipeline also includes the Tintic project in Utah, located just 40 miles south of the prolific Bingham Canyon mine, which is operated by mining giant Rio Tinto.
With a billion-dollar merger between Contango Ore and Dolly Varden Silver, and with some of the highest grade assets in North America, the new Contango Silver and Gold is positioning itself as a force in precious metals.
This new company offers investors high-grade, safe exposure to both silver and gold. The two companies individually were valued at around $400 million. And so by coming together, we're valued at about $800 million. Combined, we've got about $100 million of cash in the treasury, about $100 million of cash flow. We've got a much larger resource base, about 100 million ounces of silver, about 3 million ounces of gold.
We're a growth company that's going to quadruple our production of gold and silver in the next 5 years. It's a lofty goal, but it's one we think we can achieve. I challenge you to find another company that's based in a Tier 1 jurisdiction to do that.
And both projects offer security for investors.
Canada and the U.S. are very much aligned, recognizing that we're 30 years behind China in terms of developing critical metals. It's exciting now to me as an exploration geologist that's been doing this for going on 40, 50 years, to have people behind you and supporting you and saying this is something that we need. Along with that has come high prices of $5,000 gold, $80 silver, etc. So we're in a great environment to build a great company, and that's the objective here.
Contango just delivered another standout intercept, over 60 grams per ton gold across nearly 6 meters at the Lucky Shot project in Alaska, all funded by the results at Manh Choh.
Our Manh Choh project is in operation in Alaska. We're generating about $100 million of free cash flow a year from that mine, and that is enough cash flow to advance our other projects in Alaska, Lucky Shot and Johnson Tract. And now we're adding to that this dominantly silver project in the Kitsault Valley of British Columbia.
Investors want stability. We're giving it to them with grade in a safe jurisdiction with a proven management team.
And the timing could not be better.
I've been in the mining industry for 22 years, and to complete a billion-dollar merger, particularly with global events that are unfolding around the world, it's kind of a dream come true.
With high-grade gold and silver assets and a growing development pipeline, momentum continues to build around the future of Contango Silver and Gold.
Lahontan Gold is a really simple story. It's gold and silver in the Walker Lane, past producer, open pit, heap leach, which means low-cost mining. We have 2 million ounces on paper right now, continue to grow. That will be updated soon. What's really getting exciting is our West Santa Fe asset that we picked up a couple years ago for a very small amount. We bought it as a satellite operation for the future, and we've been drilling it out. The results recently have been absolutely phenomenal. There's so much growth yet to be had, and this year is a massive, pivotal year for us. We have permits going on and continuous throughout this year that will be updating the market with. We have metallurgic work that's going to update with our PEA over the summer. So 3 rigs turning. There's so many catalysts for people to start to play along the way. We've got 2 fantastic assets that we're going to bring back into production, and this year is a massive, pivotal year for us.
After the break, a company making a bold move to domesticate the iron ore supply chain.
There's enough iron ore in Minnesota to feed the country for generations.
We'll be right back. You're watching BTV.
Up next, natural resource strategist Byron King with his thoughts on copper.
The long-term look for copper, I think, is very, very positive. It is an indispensable metal because of its electrical properties, thermal properties, various other physical properties. And in a world where more and more people want more and more things that run on electricity, the demand is there, and where the people are, there's electricity, and where there's electricity, you need copper.
Imagine a major resource project in a Tier 1 district in Nevada, a mining-friendly state, with a highly supportive partner funding a significant phase of development at no cost to shareholders. If I've piqued your interest, you might want to focus your attention on the latest offering from Lion Copper and Gold.
There's only about 4 or 5 copper projects in the US right now that are planned to come online in the next 4 or 5 years, and ours is the 3rd largest. Within the project itself, we have a reserve of over 2 billion pounds and a resource of over 3 billion pounds of copper. Our project will deliver a copper cathode, which is 99.99% pure, ready for US domestic market.
But the project size and the quality of their product aren't the only advantages that Lion has.
We have entered into a strategic agreement with Newton, a wholly owned subsidiary of Rio Tinto. Newton brings a significant technology advantage to our project, and effectively they are endorsing our project to move forward. Newton and ultimately Rio are funding the next stage of our project that we've entered into, which is the definitive feasibility study and permitting in parallel. So they are paying for all that, not our shareholders. So I think that really de-risks the project from a shareholder and an investor perspective. The other important thing to understand is that we're doing them in parallel. So we're doing the DFS and the permitting in parallel. So what this shows is Newton's confidence in our project and also Lion's confidence in the project, because we want to get into production as soon as possible.
That urgency has started to pay off for investors in a big way.
Over the last 18 months, we've completed some significant milestones with the project very quickly, and also taking our market cap from 20 million to over 100 million, 5 multiple. And I believe that's only part of the journey, because we still have yet to get through our DFS and permitting, and I believe there's a lot of growth there.
For Lion, the timing could not be better, given expanding copper deficits, rising consumption due to electrification, the growth of AI, and exposure to an amazing rise in the commodities prices. For investors, the opportunity couldn't be more attractive.
Avino has a lot of leverage to silver with over 300 million ounces of silver equivalent. It's like buying a call on silver when you own Avino shares. We produce silver, gold, and copper. We have an organic growth plan to go from 1 producing asset to 3 within 5 years. The new mine we're building right now is La Preciosa. We acquired it in 2022 from Coeur Mining, and it's going to really drive our growth. The grade of the silver is much higher than what we're mining at Avino. Avino sells 100% of its product to Samsung, and they've been our partner for 10 years now. Avino is listed on Toronto and New York Stock Exchange, very liquid stock. We trade millions of shares a day. We have 100 million US in the bank, and we're debt free.
Up next, a major merger in the world of precious metal royalties that investors should keep a close eye on.
The best way to be exposed to mineral rights is royalty ownership.
We'll be right back. You're watching BTV.
The world is shifting towards domestic supply chains, a dramatic reversal of decades of free market globalization. And North American iron is stepping directly into that moment, positioned to capitalize on a U.S. policy environment that prioritizes industrial capacity, national security, and rebuilding of critical domestic supply chains at a level we haven't seen in generations.
In World War II, over 90% of the iron resources for all Allied forces came from Minnesota. Back then, Minnesota was one of the largest iron ore reserves in the world, feeding the globe. Today, it's only 1.5% of global iron ore reserves. Yet, there's enough iron ore in Minnesota to feed the country for generations. The U.S. mainly uses its own domestic scrap iron for its main feedstock, but it needs virgin iron products like pig iron to produce higher grade steels. The main source for this at the moment is foreign imports. So by utilizing Minnesota iron ore, the only real U.S. iron resource that we have, it's eliminating the need for foreign imports.
Administrations and politics often determine how quickly a mine project advances to production. With the U.S. administration focused on industrial development, North American Iron sees this as the perfect time to restart domestic production.
North American Iron will produce 2 million tons of pig iron per year. To put that into contrast, right now we're importing 4 million tons, yet we have a 13 million ton demand. The time is now for North American Iron to move forward with our project. Realistically, this should have been done decades ago. But we're here now, and the time is right, that we have the right administration, we have the right need for this product. This has to happen today.
Permitting that is expected to finish in 2026 is already underway, and a new supply of pig iron might only be 3 years away.
So the timeline to construction and commissioning is 2026 to start construction and commissioning and be in full production by 2029. We'll be the first and only merchant pig iron producer in the United States. And we have a very strong market and need for it in the U.S. steel industry.
U.S. production of iron is about to accelerate, powered by Minnesota's iron ore legacy and North Dakota's emerging role as the country's next center for domestic pig iron manufacturing.
Last fall, EMX Royalty Corp and Elemental Altus Royalty merged to create Elemental Royalty, a new player with its sights set on becoming the world's premier gold-focused royalty and streaming company.
Very pleased to bring these two companies together. We all know that the royalty business and the markets reward scale growth. Both companies had a strong curve of increasing revenues coming into the company. That's only been multiplied by bringing the two companies together.
The newly formed Elemental Royalty boasts an enviable and complementary portfolio of royalties from both companies.
I'm really passionate about why royalties are so awesome. They're phenomenal financial instruments. The best way to be exposed to mineral rights is royalty ownership. And Elemental Royalty Corporation is accumulating royalties copiously around the planet. So we have a portfolio of 200 royalties spanning over 20 countries. 18 of them have production cash flow, so they're advanced near the top of the pyramid with producing revenue streams. But then there's also another 45 royalties that have pre-production payments that are smaller, and then an immense magnitude of assets that are early stage at the base of the pyramid that give us the opportunity for that discovery. My goal is to break $100 million this year, and that is without the addition of new royalties that we will acquire. We've been building this portfolio for 2 decades. It is now bearing fruit, and the fruit is ripening. We've seen the price of gold go from $35 an ounce when I was 10 years old to now over $5,000 an ounce. That's a 9% compounded annual growth rate. It's rather astonishing. Copper price has had a similar trajectory. The best way to be exposed to mineral rights is royalty ownership. We want to be the royalty investment of choice. So I want to have shareholders that don't trade the stock, but they buy it and hold it for their grandchildren because they know that this is a buy and hold opportunity.
Elemental recently initiated their first dividend and also became the first public gold company to offer shareholders their returns in Tether Gold, a blockchain-based token backed by real gold.
You know, Taylor, a few big mergers stood out in our stories today, and they've clearly changed the future of those companies.
You're right, Jessica, and when that kind of scale comes together, it can unlock a whole new level of opportunity for investors.
And with the resource sector evolving the way it is, staying ahead of the curve is the key for investors. Well, that wraps it up for today. For BTV Business Television, I'm Jessica Kaczmarczyk. Thanks for watching.
And I'm Taylor Tone. Follow us right here at Business Television and be part of a growing community that's turning insight into action. And until next time, may your portfolio prosper.